Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit www.cfds.com for your trading needs. Certainly explore the products and services available, and so you will certainly apply for that potential cash bonus as well. Alternatively, visit the educational site www.cfds.education to certainly learn more. Okay, European markets basically have been butchered. Lambs to the slaughter. Okay. The FTSE 100 down by 2.4%. The DAX down almost 2%. The French CAC down by almost 2.67%. So it certainly seems to be an oil-led rout, led by BP. Okay, none other than BP. And British Petroleum, profits down 91%. I did expect the, if I bring up the chart of, this is a chart of the FTSE 350 oil and gas sector, you can see that we are now into potential support. If I bring up the chart of BP as well, show the actual carnage that was wrought today. Let's just bring this up for you. So it certainly seems to be BP. Even though the earnings from ExxonMobil certainly came out stronger, we failed to avert the disaster. Now, as you can see here, the share price of BP has put in a potential bottoming tail at 330, which is a good sign. Okay, currently it's 16:38 in European time, so obviously the markets are closing, everything is being positioned off, and you are seeing a potential bottom on the price of BP, and this is led by the actual potential bottom on the price of crude oil. You can see here there's a bottoming tail on the 4-hour chart. Zoom in on your 60 minutes. You can see that we are holding this potential support zone here. 10-minute chart, certainly a thrust higher from off the low, so certainly a good sign. Okay, daily chart certainly still does remain in that bearish category, i.e. it's bearish channel. Bringing up the chart of Brent as well. Let's just share the chart of Brent again, showing early signs of a potential bottom with that green candle. Again, 200 MA certainly holding. 10-minute chart certainly off the lows, potential there for an inverted head and shoulders formation. The daily chart, as we know, once it held at $36 level, it's certainly retraced. So the question now is, can the markets put in a higher low? That's the question we need to ask ourselves, okay? And that will be the question that everybody will be focusing on, okay? Interesting scenario. Okay, so let's try and bring up the actual economic data now in terms of news. Why? My bias was certainly bullish today. I've been stopped out on multiple occasions, currently down by minus 40 odd, I think, at present. Now, why was my bias bullish today? My bias bullish today was, number one, China was up by 2.2% overnight. So that's certainly a bullish variable. Okay, now it was up by 61 odd points. You had the Shanghai down by 0.6%, but that was understandable given the fact that it rose almost 2,000 points. So that was certainly understandable. We had the rally in the US markets yesterday. Okay, and that was also one of the reasons why I was certainly bearish. Well, bullish, and I'm still bullish going into for the remainder of the day as well. Now, if you bring up the chart of the S&P 500, you bring up a daily chart, you can see that we've broken out the symmetrical wedge. Therefore, the bulls are in control. You are consolidating, I understand, within that obviously green candle. You're certainly holding previous resistance equals support on the daily chart. If you zoom in on the 60, you will be able to appreciate that better. You are holding the neckline of the inverted head and shoulders formation. The head and shoulders formation at 1908 minus 1813 equals 2003. That's your upward target on the S&P 500. So certainly bullish from this perspective, given the fact that we're holding the neckline. The 10-minute chart has held at 200 MA. If that fails, then the next level is going to be seen at 1900. So again, keep observing that zone. It will be quite an important area to focus upon. Okay, so from my perspective, you are looking at a move higher given the fact that the S&P 500 has broken out the symmetrical wedge. It has an inverted head and shoulders formation. Yes, we've certainly been put back, certainly a backdrop in terms of weaker earnings from BP, but we should overlook that given the fact that China now is at its 200 MA. So if I bring up a chart of the Chinese market and the Shanghai, and you'll see that we are approaching the 200 MA. There you go. Okay, so certainly putting in a potential bullish candle, looking for a potential reversal on the weekly chart. So daily chart, certainly 2 back-to-back or potentially even 3 back-to-back days of gains. And again, this is looking bullish from my perspective, and therefore you are looking for a thrust higher, targeting potentially that gap up above. Okay, whether that means that a potential rate cut is coming in China, etc., there's numerous reasons as to why we could rally from a fundamental perspective. Now, from the bullish side of things, you have had stronger German data as well in terms of employment. That certainly has helped. You've had Pfizer and Dow Chemical earnings stronger than expected. US economic data overall with regards to US economic optimism certainly coming stronger than expected as well. Fisher's comments yesterday was certainly on the dovish side. Google earnings certainly stronger as well. Okay, and we've had dovish commentary from the BOJ, and obviously we have got the negative rate backdrop that certainly supports US equities. So, adding the fact that Mr. Draghi gave his QE speech yesterday as well, pro QE, that certainly should have helped European equities to a large extent. Now, the only bearish argument really is the weaker earnings from BP. We've had some US data that was relatively weak. UK construction data came out weak. Volkswagen retail sales came out weak, but the bullish argument certainly overwhelmed that. Okay, to a large extent. And having said that, all the bearish news has been factored in. Now, it's the FTSE chart I think that we really need to focus on first and foremost. The FTSE 100 had a H&S target of 5935. We actually hit a pivot low at 5890, and we've subsequently bounced. So certainly a bullish signal from the FTSE's perspective. And as you can see, the H&S is certainly complete. Now we're looking for a potential reversal. Now we're going back to your 60-minute chart. You basically held the neckline of the inverted head and shoulders formation. That's basically what we're looking at right now. So again, a bullish sign for the FTSE's perspective. The daily chart of the FTSE 100, yes, we have negated this green candle that was put in on the 29th. We shall see exactly how the market responds thereafter. But yes, that certainly is a bearish candle and certainly has negated that rally. But having said that, given the QE argument via Draghi, given the negative rates argument from the BOJ, central banks that are extremely dovish, it should support the equity market. That certainly is my bias at this juncture. Okay, the FTSE 100, looking at a 10-minute chart now of the FTSE 100. Again, you've held that double bottom. That double bottom should act as a potential pivot low, okay, on this market at present. So the next area of resistance on the FTSE will be previous support equals resistance, and that's a zone here. Okay, so looking at potential resistance here. Okay, in terms of the next potential move in this marketplace. Resistance is seen at 5950 and potentially at 5975, and we shall see how the market reacts. Okay, now in terms of the alternative, is pairs. Looking at the chart of the Eurostoxx. The chart Eurostoxx on a 60-minute chart, you are now coming into potential support. These are all areas or zones of support for the Eurostoxx, and this will be an area that we are looking to potentially get a bounce. Looking at the daily chart, the Eurostoxx, yes, we still are in that bearish obviously channel, but ask yourself this question: can that bearish channel survive with dovish Draghi? That's the question you need to ask yourself. Also, adding the fact that the S&P 500 has held the inverted head and shoulders neckline, ask yourself the question: will this, given the inverted head and shoulders in the US markets, what will happen to the European market? Hence the reason why I'm on the bullish side, given the Draghi speech for more potential QE, especially after today's weaker inflation print. It certainly cements that argument. Looking at the actual French CAC now, we did have an increase in volume. Certainly the buyers came back in. The daily chart, again, yes, we still are in that bearish channel, so certainly needs to be taken into consideration. But going back to the 60-minute chart, now you are looking at potential horizontal support. Going to your 10-minute chart, and you basically have bounced off the lows. The question now is whether we can make higher highs and higher lows. That's the question, rather than lower lows and lower highs. So certainly is a challenge. Okay, now cross-verify that with the S&P Europe 350. Again, the Europe 350 seems to be back into support. Is making a potential inverted head and shoulders formation. So again, all eyes on that potential formation. Again, like I said, it is into horizontal support on the 60-minute chart. Okay, now going over to the MDAX 50. Okay, let's just bring up a chart of the MDAX 50. 60-minute chart, you are into horizontal support. So again, that certainly supports the DAX to potentially move higher. Okay, the tech all share, let's bring up the tech all share, see exactly where this is positioned. The tech all share now is currently approaching horizontal support, and then again it does support the German DAX to move higher. Okay, so going over to the DAX, you're back into that gap fill support on the daily chart, 60-minute chart. Again, you are into horizontal support and looking for a potential thrust higher. The 10-minute chart did show some promise going into the close, so the bulls certainly came back with a vengeance. Okay, now going over to the CAC. Okay, the CAC are very similar to the German DAX. Okay, daily chart, you are into that bearish channel. 60-minute chart, again horizontal support, although you do have a gap fill that remains unfilled below, and that certainly could get tested. So again, that certainly is something to contemplate upon the next potential trade. In terms of the sectors themselves, let's just bring up the banks. The banking sector certainly was very weak today. You continue to make new lows in the German banking sector, which is again is a cause for concern. In terms of the actual commodities area, let's just bring that up for you. Okay, so the commodity side of the equation, you're looking at the stock 600 now. So again, stock 600 again too is into potential support, horizontal support on the 60-minute chart, and therefore you're looking for a move higher. Same pattern, well, not same pattern, but certainly a bullish pattern on the Nasdaq as well, given the inverted head and shoulders formation. So certainly the opportunity there to thrust higher, and certainly looking for higher prices. So the market certainly is poised to potentially rally, but we just need a bullish catalyst to really propel this market from a technical perspective. Having said that, the bearish news has all been factored in now, and the buyers should technically return. So on that basis, I am looking for potentially higher prices on the FTSE 100, given the H&S formation is now complete, and we are looking for a potential reversal very soon. Okay, that's a market wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.